What's going on, everyone? I hope you guys are having an amazing day. It's me, Abdallah, back again with another video. This is my third video on supply and demand trading, and this one is about entry, how to enter a position and how to exit a position. Before I continue with the video, I apologize if there's noise. They're playing music downstairs. Hopefully it doesn't interrupt our sound. Anyways, I'm gonna try to make this video as short as possible, just so we can get just critical exactly what we need. So we already know how to find our supply and demand zones. We know the indicator to use. The only things that I want us to add right now is our 50-day moving average. So you can jump on the indicators and look for the EMA 20, 50, 100, 200. Just keep the 50 on. Also look for, when you type in VWAP, use this one, volume weighted average price. We're gonna use that one. And the settings that we wanna keep on for this is just have the VWAP on, that's it. You can have all these other ones off. So when it comes to entering a position, I wrote some notes down. When it comes to entering a position, you will never have a perfect entry. Maybe sometimes, but it's all about this, confirmations. So it's all about having a confirmation and a reason for entering the trade. And the more reasons that you have to enter a position, the better off you will be. So if you have one reason to enter a trade, maybe volume is increasing, then that's a high risk trade. That's a low setup because you only have one confirmation. So the more confirmations that we have, the better trades we will have. So we will use our 50-day moving average, we will use VWAP, supply demand levels, and volume. If all of these are intact in a trade, that's an A1 setup. That's an A++ setup in a trade. If you have one of them, or just two, or just three, depending on what you have, I wrote these down. If you have just one confirmation, that's a C+ trade. So I wouldn't say I wouldn't take that trade, but I would be more hesitant and I would play with less money. If I have two confirmations, three confirmations, and four would be super ideal. At least 2 to 3 confirmations before entering a trade. And also, pullbacks are vital. Don't just jump in because you have the fear of missing out. Wait for a pullback to one of these, or two of these, or three of these levels, and that will set you up for a better trade. So when we jump onto our stock screener, we can see from the day before that we had some stocks that were in our screener that we could use to trade with. I wrote a few down. There was a bunch, but one of them was Amazon. So when we look at Amazon here, this is a trade that I actually took myself, and I traded it twice. So the first time that I traded it was right here, right at the open. So this trade I would consider to be an A++ trade because I had 4 confirmations. When we look at Amazon here, we can see that we pulled back. So in pre-market, it was trading at about $98, about $99. It pulled back to where? This demand zone. So confirmation number 1. We have a demand zone confirmation. So that's number 1. Number 2, it starts breaking above what? Our VWAP. This yellow line is our 50-day moving average. It starts breaking above our 50-day moving average, and we can see here with the green candles, we have green or bullish volume. So this runs up to our supply zone. So A++ setup, I would take this with a larger position. Maybe I would avoid it only if you were to avoid this trade, it would only be because it's so early in the trading day. I usually avoid trading that early in the day. So next is the second trade that I took on Amazon was about right here. And this trade I would consider to be either a B plus or an A plus trade. Maybe A-, because when we look at this, it hits this supply zone, it starts to pull back. I didn't wait for it to pull back to the demand zone. Why? Because I seen some consolidation at this zone here. And I'll give you a minute or a couple seconds to see why I took this trade. So we have this pullback, and it's pulling back to what? The 50-day moving average and the VWAP are both in the same zone. So it starts pulling back, and what I'm waiting for is it gonna close below this, or is it going to break above this consolidation? And what does it do? It breaks above, and what's happening here? Green, 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 right? Green volumes coming in, and we're holding the moving average and VWAP. So we have 3 reasons to enter this trade. So now we take the trade, and we're trading till either the high of the day or the supply zone, which is the same area, right? And let's look at the risk to reward. We would sell if there was a 5-minute candle close below this. So a 5-minute candle close, it didn't happen, but just say that was like up to here. That's our stop loss, and our take profit is all the way up here, right? So our risk to reward is insane. It's really good when you have great setups like this. And then let's see if there was one more possible trade. This is a trade I did not take, but now we start breaking below the supply zone, and just say you took a trade here because you see, okay, it kind of held that 50-day moving average, let's use this as an example of a stop loss. So you see it comes down to the 50-day, and just say you jumped into the trade right here. That would not be a great trade, right? Because number 1, red candles. Number 2, you only have one confirmation, just the 50-day moving average. You're like, oh, I think it's gonna hold the 50-day. If that's your only confirmation, what happens? There's a 5-minute close below the moving average, and you would sell here, even though it runs up, but you can't predict that in the live markets. So you would sell here. It's a small loss compared to when you have A1 setups. So in trading, you're gonna lose some, but you have to keep your losers short, just like this, small. I was talking to a couple friends and a couple people online who would tell me, oh, my contract's expired, or I'm down 70%, I'm down 80%. What do you think is gonna happen? I don't know. Nobody knows what's gonna happen. So you should never allow it to get to that point. You should never be down 80% on a trade. If you let this trade close around here, maybe you're down 5%, 10%. That's it. And then now you have money to take another trade or for the next trading day. So this was Amazon. Let's see if there was any other trades. I think one of the leading were Coinbase was one of the leading stocks to trade today. And you can see that right at the open, we have Coinbase break down, and it's holding this 50-day moving average. It's holding VWAP, and it's at a demand zone. So you take this trade, and Once it comes to, this is my strategy when it comes to exiting a trade, because it's harder. Once you jump into a trade, you get that anxiety. You're like, oh, I want to just take my profits. You don't know that if it's going to come from here all the way to here. What do? Is you consider exiting a position at areas of importance. Like what? Like if you have a stock hit a supply zone, that's an area of interest. So I would sell most of my position. If this starts running up and it comes to the 50-day moving average, there can be a pullback. If you want to take some profits, take a little bit there. If you have something, let me see if I can find opposite scenario. Okay, so BABA was also one of the leading stocks with relative volume. Now, just say you took this trade right here, you jump into BABA right here. You jump in because you see a couple of green candles and you see it's in a demand zone. This is a low level trade because you only have one, maybe two confirmations. So it's like a C plus trade. So anyways, you jump in. Where I would consider selling immediately is here. Why? Because we have the 50-day moving average and VWAP both at the same zone. I would take my profits immediately here because expecting it to break through is being very hopeful. So I would just sell most of my position here, and you can see it kind of broke through, but it came right back down because this is area. What's the 50-day moving average mean? It means where a stock price was traded in the past 50 days. So if it's already red, expecting it to outpace that moving average for the past 50 days is expecting a lot. And also what is our VWAP? It's our volume weighted average price. So it's trying to measure the average price with volume averaged in as well. So expecting it to break above that is being hopeful. So I would just take some profits there. So in the next video, I'm going to talk more about selecting the right contracts. But before I make that video, what I would say is when I say I'm taking 10% as a stop loss, I'm usually trading in the money. So if I'm taking, just say this is at $70 and I'm trading for calls, so I think it's gonna go up. I'm not gonna buy $75 calls because I don't trade out of the money. I like to trade in the money. So I might buy, or at the money, I might buy $70 calls. I might buy $68 calls or $65 calls. They'll be a little bit more expensive, but they will be more in tune with the underlying stock. So as BABA goes up, that will also go up. And I'll explain that more in the next video, which will be more about the psychology and the contracts, which are very important because a lot of you know how to trade. And for a long time, I knew how to trade, but I was losing because of psychology and selecting the wrong contracts. So that's gonna be a very important video as well. Thank you for viewing this video. Please comment below if the noise was okay, and if there's anything else you would like to see. So just a quick review. This video was about how to enter and exit a position. When you're entering a position, just make sure you have as much confirmations as possible. I like to use the 50-day moving average, VWAP, supply, demand, and volume. I make sure I have some sort of pullback before I jump into a position so I can avoid FOMO. You don't want FOMO. You don't just buy something because it's going up. You don't sell something just because it's going down. You watch your confirmations. The more confirmations you have, you're looking for A1 setups. Well, not just A1 setups, but you're looking for the best possible trades. That's when you go in with good size. When you have a stock that is showing you all the confirmations, or more confirmations, you'll be in a better position and you'll have less anxiety. And when you're selling a position, you're looking to sell at levels like a supply level, or if it's coming down to a VWAP level or a moving average level, or a percent. I like to use percents a lot more. I like to take either a 10% losing position or a winning position that's 15 to 20%, so it's a little bit higher. So that's all that we have for today. Thank you everyone for viewing this video. Peace.